I wonder if this strategy of aggressive spending and aggressive discounting on the product is paying off or not.
Thank you, first of all, for having me on the show. Good morning. I think, first of all, we reported yesterday our second quarter results. I think across the board, we're very happy with the results. You saw that the revenue was up close to 700%. Very importantly, I think we reduced our store-level profitability significantly. If you look at our strategy of acquiring customers, retaining customers, and also increasing the effective selling price, I think we've done a very good job in Q2, and we're very happy with the position we're in today.
What's happening with share between you and, say, Starbucks? Obviously, that's the rivalry everybody's watching. Are you, in fact, taking share from them in China?
Yeah, it's an interesting question. I think China is a big market. We have 300 million sort of middle-class consumers. It's a big market. The coffee penetration is under-penetrated. It's certainly a market that is big enough for two players, and I think our positioning is obviously slightly different than Starbucks. We're very focused on quality coffee for takeaway and also delivery. And I think that is the market where we play and gain a lot of share. I think overall, the market is growing quite significantly. And I think we both do pretty well today.
Have you been surprised by the way that the trade war between the U.S. and China, seemingly thus far at least, hasn't hurt Starbucks' brand image in the eyes of the Chinese consumer?
Yeah, look, I think again, China is a market that is in terms of opportunity very big. We're talking about again 300 million sort of middle class consumers. It's a resilient market. It's a market that is very innovative. I think the impacts of the overall macroeconomic situation are starting to be felt more. I think with our model, and I'm obviously very focused on our model, we are a combination of convenience, quality, but also affordability. And I think particularly the point around affordability will help us a lot in sort of gaining more market share going forward.
You recently told Reuters that you believe you can get to EBIT break even by the end of next year. In doing so, in cutting those costs potentially and relieving some of your discount opportunities, does that sacrifice your ability to take on Starbucks in any way? And are you looking to do this at a time when the Chinese economy could be facing a confluence of other factors on a macro scale?
Yeah, I think, again, here, the position we have is slightly different because we are focused on convenience, affordability, and quality. I think it's very important for us that sort of the price point that we're looking at is going to be maybe half of the price point than from some of our competitors, including Starbucks. And I think that will draw a lot of the consumption, mass market consumption for coffee, which we're seeing today as well. In terms of our sort of forecast for profitability, I think what we've been guiding the market is to get to store-level break-even by Q3 2019. I think we're on the right track. I think we're very close to that point by the end of Q2. And for us, over time, we want to obviously increase the store-level profitability and then also reduce the sort of further operating expenses. I think in Q2, you see that we spend a lot of money on sort of sales and marketing. For us, it's very important to continue to build that strong brand, and I think the IPO has helped us a lot. But these are expenses that are discretionary for us, which I think we can dial back once we have sufficient scale.
Reinout, can you just expand a little bit more on the comments you made about the Chinese macro environment? Clearly, we've seen the data slow down a bit in China, but are you suggesting that the consumer remains pretty strong regardless of the trade war?
Look, I think China is very resilient. I think overall there will be a bit of softness that across the market you'll feel. It will hit sort of consumer confidence at some point. I think again with kind of our positioning, which we are very focused on, is really making sure that sort of people will need to drink coffee, will need to drink sort of tea and have their lunch. And I think what we're trying to do is make sure that we can help people save money so they come to our stores, which are, by the way, very, very close to where they're working. And obviously drive sort of that consumption going forward. So again, even if there is going to be a little bit of softness in China, which I think everyone will expect, I think with our model and positioning, I think we're in a very good place.